Hello and welcome everyone. Today we'll be talking about Perpetual Protocol. This is the third DeFi exchange we will be talking about in this series. If you haven't checked out the other videos, make sure to go look at them. We talked about GMX, we talked about DYDX, and now number three, we're talking about Perpetual Protocol. So we'll be covering what Perpetual Protocol is, where you can trade, and most importantly, we'll be covering, is it unique? And why should you spend your time on Perpetual Protocol? Well, we'll be covering all this. And we also have a referral for all of you that want to try it out so that you can get some discounts on the trading fees and you can enjoy your trading on Perpetual Protocol. So I'll see you around. All right, we are back. Perpetual Protocol. This is pretty cool platform. They are exclusively on Optimism. Optimism is Ethereum layer 2 solution. Layer 2, what does that mean? Why do we care? Well, essentially, you will have all the great security of Ethereum. You have everything from Ethereum, but you are paying way less gas and it's quite a bit faster. So, Optimism is a way they use a roll up technology. Essentially, they compress a bunch of transactions before they send them up to Ethereum to get confirmed and validated. So, that's Optimism. Really super quick recap so you understand. In order to use uh, Perpetual Protocol, you would have to bridge some USDC on Ethereum. And you can do that pretty easily. We can talk about some of the bridges available. I'll mention the most. If we go over to optimism.apps, we can go right here. We can look at all the bridges that you can use to get your liquidity onto Optimism so that you can use it. I have used Hop Exchange, but Optimism also have their own bridge right there if you want to use their bridge and not a third-party app. So you can see the Optimism bridge right here. So all of these solutions are easy ways for you to migrate from Ethereum onto Optimism, easy and quick. It takes about 5 minutes once you migrate, and then you're ready to go. So let's hop back onto Perpetual um, Protocol. So we can see they got a really nice trading view chart going right here. On the right side, we got long and short availability. Our buying power is how much collateral we have times 10. So you are allowed to use up to 10x leverage on this platform. And then depending on that 10x leverage, you can manage your risk and so on depending on your collateral. So that's why we have this buying power. So the max buying power equals your free collateral times 10. If that makes sense. So any collateral that is not currently being used for trade times 10. And if you do enter to trade, you got your entry price, the trading fee, and the price impact. Perpetual protocol uses a mix of perpetual contracts. So, what are perpetual contracts? They're essentially futures contracts that don't expire, so they can stay open forever. And for that, they have funding rates. So, you can actually check the funding rate here because the funding rate is going to tell you, are you going to be paying for keeping over a long, or are you paying for keeping open a short? So whenever funding rates are negative, shorts are paying. When funding rates are positive, longs are paying. And they do this in order to equalize the price so that there's an incentive for users to either open long or short positions depending on the funding rate. So that was a really quick recap on funding rate, a little bit on how um, Perpetual Protocol works. And you can see on the left side, all the assets that you can trade on Perpetual Protocol. They have quite a nice list of assets. They got Avalanche, they got Atom, Aave, Bitcoin, Ethereum, Flow, FTM. So most of the top assets that you might want to trade, you can find them all on Perpetual Protocol. This is pretty cool. On Optimism, fees are usually cents, so maybe you'll be paying 10 cents for trading and opening and so on, opening a long or a short. We can see how much you want to long or the amount in USD, your positions, your fills, and you can manage all that pretty nicely on this platform or on this page. What I like about Perpetual Protocol compared to DYDX that we used last time is how on DYDX, there's just so much information that users can get a little lost in just so many options. Perpetual Protocol really simplifies everything, makes it a little easier to understand because there's less options, but it's really straightforward what you want to do and how you want to do it. Moving on, we can see some other stats. Like it's really important to see one, volume when you're looking for an exchange, but also fees and traders. So when you look at this, you can see how much volume is going to tell you how much liquidity there tends to be on the platform. So whether or not your sells and buys are going to go through, it's really important to track that liquidity so that you can trust that your trades are going to have enough liquidity to go through. So we can see that, 10 billion, I can't read these very long numbers, might be, pretty sure it's 10 billion, which is huge numbers, great for Perpetual Protocol in terms of trading volume. They've collected 9 million in fees, which is amazing for a protocol that has essentially launched in the past couple months. They have 13,000 distinct traders. They have 3 million total number of trades. Wow. So people are definitely using the platform. They are trading. They have an insurance fund, and that has been steadily growing thanks to the use of a lot of the fees that have been collected. So it's very nice to see that they're managing the risk with their insurance fund. And then we can also actually track the USDC trading volume by day and to what pair. So we can see over here, I believe it was right around May 10th, which pairs had the most trading happening on them. And then finally, the daily trading volume, we can see there's definitely spikes on some days, like on January 20th, we had another spike over here, and we can kind of track. Usually the days with the most volatility is when you will have the most volume on the platform. So these are very good numbers for a new protocol. Year to date, they've basically been going up. They've been steadily climbing very consistently, and we can actually see the daily active traders. It's a nice steady climb overall. After they launched, they definitely had quite a bit of activity and towards the end of December. And then since then, even though activity came back down, they've had a nice steady climb of traders using the platform, checking it out. And that's really good to see when you're looking for a new exchange. Are people using it? Are people staying around? Perpetual Protocol is delivering. Next, we're going to talk a little bit about their pools. So what are their pools and why should you care? Well, as I mentioned with DYDX, for example, you can, instead of being the trader, you can be on the other side and provide liquidity. So their numbers here on the pools are a little bit annoying because they don't reflect the exact numbers unless you actually deposit. But we can get an estimate of what you might be earning. And why are they estimates? Well, it's because it depends highly on the amount of volume that is traded on that pair. So if we choose to add liquidity, we go to this other platform where we can see you think the price of Bitcoin will go up, then down, or down and up. It's pretty simple. And then depending on what you think, your liquidity will be added into that range so that you can earn more or less fees. So you speculate the price will go up as much as 20% above 29K, but ultimately it will go below 29. which means you think it might go up, but then it will go down. Or you can go on the other side. You think it'll go down and then up. You speculate the price will go down as much as 20% below 29K, but ultimately it will go above 29K. So depending on this, you will get your liquidity will get placed in a specific trading range, and depending on that trading range is how much you will be earning in this APR. And that is why they don't give you the exact APR, because if you were to choose, for example, a trading range that is very specific, say you want to provide liquidity for whenever Bitcoin is at exactly 29K, well, then you're only ever going to be earning fees when people trade a Bitcoin at 29K. And then your fees will depend highly on that range. This is how Uniswap V3 works, V2. And Perpetual Protocol is actually using Uniswap on the back end for this liquidity in order to have access to these tokens and have access to this trading range exactly. So that is why you can actually provide 3 different liquidity pools. So liquidity positions, you can have 3. And the reason you can have 3 is because you can say, okay, well, I want to have part of my liquidity and 40% in below the current range or 60% below the current range, or I want to have it very tight. And then depending on exactly how much, then you can say, okay, I'm going to provide USDC for the liquidity because that's what they need in the platform, USD. And then you can get actually very advanced in the range. You can say, okay, my range is going to be exactly 23K to 35K. And that's going to be my trading range, because if you were to say be a trader and you know Bitcoin is going to be within this range for at least a good amount of time, then you know that your liquidity is going to be the liquidity that is used the most, and thus you're going to be earning the most interest on that liquidity. And this is a very interesting way of managing liquidity for an exchange. And it's really cool to see how they've implemented it, and they've made it very easy for any user to understand. So if you want to simply earn fees instead of trading, this is something you can do, and you can use your TA that you've learned in the bird nest just to find that perfect range where you can earn the best liquidity. So moving on, we got the rewards or the liquidity mining. So you can see that the base APR is estimated. It's an estimate, and it depends on what I just talked about how you have to find your range. And then you got the base, and then you got the reward APR. The reward APR is a bonus on top of that range. So usually, if you were to go strictly off the minimum, you're going to be earning 3% plus 1% on the rewards. And if we go to different coins, we can see that some have more rewards than others. But there's a lower cap. So for example, the one coin has a cap of 19% on the upside, but it seems the rewards are a little higher. We can see different things like with Link, the reward is higher. The base reward is 14%. And this tends to be done in order to motivate people to provide more liquidity. For example, Avalanche seems to have some nice base rewards so that people can provide liquidity on that token and trade it more often. There's other kinds of rewards on the platform. So there's staking rewards. If you get your Perp token and you stake it, then you can get specific rewards for that. So far, I don't believe they have implemented the fee sharing mechanism, but most exchanges work to do that. So most likely they will have rewards based on how much fees are collected, how many fees are collected on the platform, and then staking rewards will go to that. There's also a gas rebate program, which I think is really cool. So whenever you make a trade, you have to pay some gas using MetaMask. And they have a rebate program so that people that do a lot of trades are going to get some rewards back in Perp in order to kind of offset that cost of gas on Optimism. Even though gas is very low, maybe 15 cents. Well, if you have, say, for example, 100 transactions in a month. So maybe 2 transactions per trade you open and then you close. Those 2 transactions, that's 50 trades in a given amount of time. Well, 50 times 15, it starts adding up and it starts, you have some cost you have to consider. So this rebate program is very nice for you to offset those initial costs. Then there's the liquidity mining program, which we just talked about over here, about how you can provide liquidity and you can earn rewards based on that. And they also have a testnet competition reward. So this one is actually done, but before they launched their mainnet, they had a testnet where you could kind of claim rewards and practice trading on the platform, which was pretty cool. I know I've covered quite a bit on Perps protocol. I'm trying to get through it and answer everyone's possible questions. Again, if you guys have questions, drop it in the comments. We can do a follow-up video on all of this. Moving on, multi-collateral. So what does this mean? On Perpetual, you need collateral in order to open positions, because it's very similar to, for example, Binance Futures, where you have your collateral and then you open a position on the perpetual contracts. Most of the collateral was USDC, but recently they launched multi-collateral so that you can use Ethereum as collateral, though Ethereum has a smaller weight. And you have to remember, if you're using a volatile asset as a collateral, then there's a higher risk of liquidation, because whenever prices go down, your collateral is also losing value because it's all matched to USD. And there's a collateral deposit cap. So if you were to want to use, for example, Ethereum as your main collateral, then there's a cap on how much Ethereum. Right now it's 300 Ethereum, so it's a pretty high cap. But if you're a whale, maybe it's something worth considering, as they prefer you use USDC. So remember to deposit some USDC. They do highlight this. And why do they highlight this? Well, exchange fees are paid in USDC. Funding payments are also paid in USDC, and the negative P&L is paid in USDC. So it is recommended to maintain some USDC balance in order to cover costs. Withdrawals will be disabled in the account that carries a negative USDC balance. So if, for example, you are trading and you had ETH as collateral and you lost many trades, then you will have a negative balance and you will not be allowed to withdraw your ETH until that balance is paid off in USDC. So it's better to just use USDC or have a good amount of collateral there so that you can be safe. Finally, collateral liquidation. It's very important to talk about liquidation because it's part of managing your risk. Of course, you never want to be liquidated, but you have to understand how it works. So Ethereum index price, say, for example, 1,000 USDC, then you discount a certain amount, and that's kind of the liquidation. So the trader originally has ETH, which is worth this much, as collateral. And when the collateral liquidation happens and his settlement token, USDC, is in debt, then the debt is this much. If that makes any sense, am I being a little complicated? Essentially, if you're using Ethereum as collateral, then your Ethereum will be traded into USDC in order to pay off that debt automatically if you do not have enough to cover that debt, if that makes correct sense. So this is essentially how liquidations work. They will just take all of your collateral to pay off that existing debt. So finally, the rewards dashboard. This is where, if you want to try out protocol, you can come here. We have prepared at the Burp Nest a special referral code. If you go over here and type Julian with an X, you can submit it. Click submit, things load, then you will get your trading discount from the Burp Nest, all for you, so that you can try out Perpetual Protocol. If you guys have any questions, again, type them in the chat. Make sure to join the Burp Nest so that we can answer all your questions in the Discord. There's a free 7-day trial over there. Perpetual Protocol, incredible work done by the team there. We'll be tracking it very closely, see how it develops. It's a very nice, clean platform, and I'm excited to try it out, use it a little more, see what I like more. I've mentioned 3 trading platforms so far, and I'm sure we'll be seeing a lot more of these in the future. So make sure to check out the other videos if you haven't seen them on DYDX and GMX. Those are some pretty cool trading platforms as well. So I'll see you in the bird nest. Peace.